The standard startup myth suggests that building a high-growth company requires moving to a tech hub like San Francisco and fighting thousands of competitors in a saturated software market. But a parallel economy exists where entrepreneurs generate millions in revenue by targeting unglamorous, highly specific niches that mainstream investors typically ignore. This economy is led by founders like Kevin, who sold a trash compaction business for nearly $2 million, and Noom, a 24-year-old manufacturing specialized medical devices on 3D printers in his closet. These markets are hidden in plain sight. The question is, how can an entrepreneur systematically uncover and dominate them? Success in these spaces relies on one premise. Low competition does not signal low demand. It often signals a lack of visibility to the masses. The first category of hidden wealth sits in boring B2B infrastructure. Kevin achieved his $1.8 million exit in the commercial trash industry using a brute force sales tactic. He wore a red hard hat and carried a clipboard to bypass front desks, speaking directly to the warehouse staff physically loading the dumpsters. Another founder, Nick, operates a backup generator company doing $12 million in annual revenue. He identified that the industry's primary bottleneck wasn't a lack of demand, it was the slow turnaround for service quotes and the difficulty of training mechanics on complex legacy machinery. While industrial giants like Caterpillar can take weeks to provide a repair quote, Nick's team uses custom software to automate the process. This timeline shows the specific gap in response times that allows a smaller operator to win the contract. Nick uses proprietary AI models to ingest thousands of technical manuals, allowing grease-covered mechanics to receive instant diagnostic answers on site, effectively shrinking the quoting process to seconds. By applying modern software to traditional labor, a founder can easily outpace legacy players that are still reliant on paper-heavy workflows and slow-moving corporate hierarchies. The second category of hidden wealth is found by solving hyper-specific personal pain points. This chart highlights the TMJ market, chronic jaw pain affecting tens of millions of people. Despite the scale of the problem, Noom discovered there was not a single dedicated consumer brand serving this community. He manufactured the TMJ pen using closet 3D printers and used social media content to reach his audience. This low overhead approach currently generates close to $500,000 in monthly revenue. This strategy also works for emotional voids. An AI companion app called Tulin has scaled to over 100,000 paying subscribers by acting as a digital guide for daily life. Midwestern mothers are the primary users of this digital alien. They use the tool to coordinate family schedules and close the mental tabs that contribute to daily stress. Identifying a desperate, localized physical or emotional void often leads to higher conversion rates than chasing broad, universal appeal. The third category involves building specialized digital infrastructure for independent creators. A platform called Hotplate allows home chefs to easily bypass the heavy capital costs of opening a restaurant. It provides an Instagram-integrated storefront that manages pre-orders for local food drops. As this map shows, this invisible food economy is vast. Hotplate has already processed over $100 million in sales for independent chefs operating out of residential neighborhoods. Similarly, Overlap automates the viral clipping process for podcasters and media teams, using AI to identify and distribute the most engaging moments from long-form video. Providing specialized tools to these fragmented subcultures unlocks economic value in markets that were previously unmonetized. A common misconception in modern business is that an idea must be universally recognized as essential to be valuable. The anatomy of a blind spot business is actually the intersection of high operational friction, an ignored community, and a desperate necessity. New wealth is being generated by founders who focus on the exact operational bottlenecks and physical locations that Silicon Valley refuses to investigate. These high-margin opportunities are often disguised as boring problems in a commercial dumpster or localized demands in a home kitchen.